Joining us at Post 9 this morning, Sheila Kahyaoglu, Jefferies analyst covering aerospace, defense, and airlines. She covers Lockheed, Northrop, RTX. We'll get to all of those. But on the United story, Sheila, Kirby discussed it this morning, the reliance on the Tel Aviv route. I guess the question is how long that interruption will last, right?
Sure. And they're only betting until the end of October, and it's cutting about 1.5 points of capacity. But what we think is really weighing on United shares is costs. Costs are exiting the year up 4 to 5% year over year. We have a flat cost assumption for 2024, and every 1 point of cost is $1 of EPS on $10 of EPS for 2024. It's not pretty.
Are these new labor contracts coming into play?
Exactly. Okay. Labor contracts plus aircraft delays. We're seeing MAX delays. Kirby cut his MAX outlook for 23. But obviously, United has 800 new aircraft coming in over the next decade. It's going to weigh on their free cash flow, and that's really what's weighing on their costs, too.
And fuel, right?
Fuel, of course, yes.
Yeah, with oil prices rising. I wanted to ask you about the defense companies, because with all of this, we've seen their share prices elevated. They had a big run last week. Does this change the trajectory of earnings for them? What's happening in the Middle East? What's happening in Israel?
I think it will. Right. So we've seen massive supplementals to Ukraine, $122 billion. There's the fifth supplemental being held up by Congress at the moment. So we could continue to see that. The defense budget looks like it's going to be up 3 to 4% for fiscal 24. But I think what this will do is fund that short cycle, not only as a short cycle bump up, but what we're hearing is this is an 8 to 10 year restocking cycle when we went to the Army show last week. So, beneficiaries of it would be the short cycle Army exposed names like LHX and General Dynamics, I would say.
What weapons does Israel need? Because President Biden said he's going to make an unprecedented request from Congress later this week. And who makes them?
Missiles, munitions, and that's why we point to LHX. They just closed the deal of Aerojet on July 28th. That is a direct exposure to that, which they had zero of prior. So you're getting 15% exposure to that. They already have 15% Army exposure. It's their second largest customer. So we're going to see a restocking cycle, not only because of Ukraine, but now Israel and the U.S. stockpiles are very low. General Dynamics also has 10% exposure to those same weapons, munitions that we're looking for. And obviously, there'll be fighter jets like the F-35, helicopters, but those are big plays. But what we really need is equipment on the ground at the moment.
I did notice RTX was one of the most shorted industrial names going into the earnings season. Is a lot of this covering shorts or putting on fresh longs, do you think?
I think on RTX, the problems are their Pratt division. It's their engine business. It's accounting for 25% of revenues, but they're essentially having an aircraft grounding. Their GTF, they're going to see 40% of their fleet essentially grounded in the next 12 months because they're going through the powder contamination issues. So that's one of the problems with that stock at the moment. Until we see them get through their engines, we're not going to see that stock see some relief.
You mentioned that the U.S. stockpile is low, something I've been hearing. I mean, terrible time to not have a Speaker of the House. How low is it, and what needs to be done? And do you expect that Congress will pass the funding to do everything that you just mentioned?
We met with the DoD controller, Mike McCord, last week, as well as several U.S. Army officials and heads of businesses, and I think those stats are very hard to come by in terms of what the actual stockpiles are. Obviously, that's very proprietary. The government's not providing that, but we know they're low, and this cycle is not going to be a one-year bump.